Sort of what I do.
Okay.
Schedule. Rhythm.
Okay, we are going to get started. I think we have a few more people that may be coming in while we're going, so to let you know, but we are excited about having a summer in the sand in person. It has been 2 long years, and last time we had summer in the sand in person was summer of 2019. So this was really exciting, and we really appreciate all the people that jumped on it immediately and said, oh, I'm absolutely going to be there. And then most importantly, we're so excited to have these founders here who said, cannot wait, would love to share this story, love to talk about raising money in Kansas City, their journeys, their story, and really interact and take a lot of questions from all of you. Heidi, who was our 3rd panelist, ended up testing positive for COVID this morning. So she sent her very sad, we thought about trying to Zoom her in and hybrid it. We said, oh, we'll just save her for another time, but she was really sad to not be able to be here and be a part of this, but you are in excellent hands with these two. And then for those of you who have not yet met Chris Raycamp in the flesh, although he's been with us for 18 months now, he did come during COVID. And a lot of people have said, wow, I've talked with you and talked with you and talked with you, but never actually seen a 3D version of you. So this is Chris, and he is going to facilitate the panel and get you guys started. So I'm just going to put a quick plug out that we do summer in the sand, obviously every summer. Not my brightest comment that I've made, but we have one more in July that is going to be around product scoping. Definitely for the non-tech founders on working with your product development shop and scoping on it. And then Charlotte Clark, raise your hand, the infamous Charlotte Clark is then leading a 3-day the following week, which will be the last week of July, product development booth camp. Tuesday, Wednesday, Thursday, or Wednesday, Thursday, Friday. Wednesday, Thursday, Friday in the afternoons of that week from 3 to 5 with a deep hands-on. Here's what we're doing. How does this look? What does the product look like? So look for more on that coming up as we round out summer in the sand and then move on into August. So without further ado, I will hand it over to Chris and let you get started and make introductions of these fantastic people. Hey.
Yeah, thank you all for being here. You know me and Parker. Sorry to not have Heidi with us, as Jill said, but really excited to have this conversation. As Jill said, we just try to, with the Summer in the Sand series, address the things that continually come up that are challenging to the founders to walk through the door, and then give them reference points of peers that are a little further down the road to hopefully help in that journey a little bit, right? And so Parker and Nomi have been there and done that, and are really invested in this community, and so I'm just excited to dig in a little bit. Would you two mind giving us just a little background on your companies and then a little bit of a flavor of your capital raise journey so we know where you're coming from?
You want me to go first?
Yeah, good.
So I'm Parker. Good to meet you guys. Got a allergies. It's not COVID, so no worries there. But I'll be coughing throughout this today. So I'm the founder of Fanata, and Fanata's been on a really interesting 4-year journey. I have done everything from raising $50,000 and paying myself $1,000 a month to immediately paying myself $0 a month, to then getting a part-time job and a second part-time job, to almost going bankrupt, to now fast forward, that was probably in year 2.5. And then went on about a 1.5-year journey of raising $3 million in funding, probably 3.3 million in funding. And now I've kind of gotten to the top of that roller coaster, and now we're going down again for hopefully a Series A this fall. been in a lot of probably your shoes, and I'm excited to learn, about where you guys are at and see how my story can help you guys find that sixth spot.
Awesome. I'm actually really honored to be here with Parker because I've seen Parker go through like such long process of just trying to figure out like product market fit. And then I saw you really meet that like way down the road. And so just watching, it just always looks like it's such a, oh, we raised this much money and we're this successful, but really you really grinded. And I saw that. So really honored to be here with you. I'm Nomi and I'm the founder of PMI Rage Pro. So I was a mortgage loan officer and I had a very inefficient way to quote private mortgage insurance. So if you buy a home with less than 20% down, you have to pay private mortgage insurance. And there are 6 different providers in the United States. And it was very complicated where you'd have to go to 6 separate places to quote it. And so what we created is essentially an Expedia or a price line of private mortgage insurance. And so I raised about $1 million. I went through the journey very similar to, I've been at this for 2.5 years, but really full-time for a year. I let go of my job last year, but also went through lots of the struggles of, okay, yeah, let's go and really try and conquer the world and have a big vision and raise a lot more money, to really just learning from the market. Okay, I got to really conquer what I have here first before I can go and do the bigger things. So I've really pivoted from, my soul or the core company to something bigger, and now pivoting back to, okay, you know what, I know exactly what I need to build here, so I'm going to go do that. And so about $1 million is raised, all from angels, actually.
I actually got a high five, Nomi, when she went full time in for PMI Rate Pro. So I remember that day. We're very, very close. Yeah, so you'll get some good info, I think, from us for sure.
Yeah.
Yeah, and so I have a series of questions that I'm curious about that I hear from founders consistently that I really like. So I think we really like for you all to weigh in and ask questions that are pertinent to where you are in your journey. What part is your youth? That's the most relevant thing that you'd be talking about today. And so please feel free to raise your hand or log back with me, and we'll make sure we get those questions answered. And some of this, it's not going to be really technical, but you're just make prompts that you can go and there's insecurity about it. Let's just talk about, there's a lot of terminology, linguistics, and hard things. I think you guys started off really well by saying it wasn't easy, right? It was years and years, and had to get part-time jobs, and maybe almost lost it a few times, whatever that might be, right? So we can own that part of it as well. That's the real part of this journey. So. You mentioned angels. There's all kinds of investors out there. One thing I hear consistently from founders is looking for that lead investor, the first person to trust you or invest in you. Talk about your journey, and maybe you can start, and you guys can go back and forth on it, but kind of the validation, finding that first investor, the difference between talking to an angel or a friend and family. What was that journey like?
Yeah, so first of all, I'm not from here, I'm from Mongolia. So I had a mentor that helped me kind of get the company started and kind of showed me the ropes. And he was like, okay, you got to go raise $500,000. And I was like, where am I going to find $500,000? I don't know anybody in Kansas City. There's no way. And and I was like, okay, whatever. But then we came to Digital Sandbox. I think that was the first thing that we did. However, prior to coming to Digital Sandbox, we had already had a customer in Kansas City that said, hey, we'll actually utilize this tool. So we were building something that we knew would actually generate revenue for us. And I think that was very helpful when you're pitching to Digital Sandbox, because they're looking for companies that are really solving problems. So that's really where I started. And then from Digital Sandbox went to Pure Pitch Rally. And then from Pure Pitch Rally, we joined Techstars when it was Techstars in Kansas City. So there are steps that I think that will really help here in Kansas City, if you just follow them. But in the meantime, there was a family office that actually reached out to our company through like the PRs, right? It's important, whatever you do, that I think you have to get your company out there in Kansas City Business Journal, or, you know journalists that are kind of getting you out there saying, this is what this company is trying to solve. And so from that, we had a family office reach out and said, hey, you know what? This was actually a really great family office that was like, I want to help minority founders. And that was the reason that they wanted to invest, which was so amazing. And so they kind of led the round. And then through Peer Pitch Rally, just talking to so many people, right? Being in front of so many, and then just so many no's, but you know, they'll introduce you to somebody else, and just kept going and going and going. And then before you know it, I had most of the entrepreneurs that have done well in Kansas City really come and support me, which I got really, really lucky. It wasn't easy. It took about a year to close the first 750. And then ultimately, I think the angels that are coming in, if they're experienced angels, they know they'll have to come in again for the next round. And so that's how I was able to kind of raise the rest of the money currently from our current investors. But there's the Mid-American Angels, Women's Capitals Connection. There's so many little groups in Kansas City that have helped, I think, make connections, and you just have to really go through them. In terms of like difference between angels and VCs, it's completely different. I think I tried to raise money from VCs for 6 months with no luck, and it was a lot of distraction, a lot of hard work, and lots of no's. Some people have successfully raised from VCs. I have not done that yet. I think really the biggest difference I found is angels are comfortable with maybe, you know, a little bit less of a return, right? Maybe 5-6 times the return, but they are okay with you selling the company sooner so they can get that return. Where VCs are looking for the next unicorn, where you're going to return at least, I think 30, 40 times or more. And so when they're going to solely look at your, you know, the market size, right? And so this is where my company is very niche. And so when it's niche and you look at the big market size, they couldn't kind of connect the pieces together. I do think that if I had a company, which, you know, I do think after this company, I'll probably continue to do another, just because it's terrifying, but it's also very addictive. But if you have a good market or a good market size, I could have probably closed VCs, but it was really just the market size that really restrained me from that. So now I'm just back to pitching to angels, and angels are easier to talk to. They understand the struggles, I think, and you can be on, you know, a lot more authentic with them. Actually, you should be authentic with the VCs too. But, you know, I've heard from lots of founders also, like, raising money from VCs is not very good, because it could also force you to grow your company in ways, so many bigger, you know, ways than really just focusing on the right thing. So
Yeah.
We're talking about, your journey to finding the kind of being validated with investors, whether that's angels or beyond, and that was a long journey. So how did you kind of connect to that sphere?
Yeah, so I think I did everything wrong. So like I'm basically working my way through like how to do things the wrong way, so that everyone here doesn't have to do that.
Thank you.
Yeah, just go forward, right? So my journey really started, I was a wealth advisor when I got the idea for Destiny, which actually is what I took to Digital Sandbox. So thank you to Digital Sandbox for helping us at that stage of our juncture. But really what I was doing, I was living in Tulsa at the time, and I had this idea, and I spent a year trying to figure out how to be an entrepreneur while being an advisor full time, and really trying to figure out how to build a tech company. I did not come from tech. I was a poor, broke country boy from Missouri and didn't know anything else but how to work hard. And I realized I had a very high pain threshold, right? Like I played football, played sports. So like that kind of parlayed into that, where I could just take a lot of no's and a lot of you're an idiot, a lot of that's a bad idea, a lot of those things, and just keep moving forward. And so the way I raised capital to start and leave my full-time job and go full-time into what was Destiny at the time, which is now Fanata, was I raised money with my friends. Like, I didn't go to VCs, I didn't go to angels. I went to my buddies that I grew up with who knew me better than anyone, and their dads. Lucky for me, like, and I grew up in Webb City, Missouri, Joplin, Missouri, that area, where it's like you work at one of the factories in town or the other one. That's your life decision. And so these were guys that, you know, were working bread trucks and were working at the Cardinal Scales plant in town. And like, those are the folks. I raised $50,000 with that group, which was like, it's just still crazy to think about. And I had that 50,000, and I was like, I think I need 100,000 to do this full time, I think. And I was actually getting courted by an accelerator here at MBKC down the street on Ward Parkway that was doing a fintech accelerator. It was the first time they'd ever done one. And on day one, because I had been doing all this accelerator stuff. Anybody heard of like YC, Y Combinator, right? How many people are doing like software companies real quick? So a lot, majority, awesome. So I was applying to YC and 500 startups and AngelPad and just like the whole entire gambit, and just was getting no every time. And so I applied to, like, Fountain City FinTech opened up, and literally within like the hour that they opened up, I submitted an application. And talking to Zach, the manager of that program, we were like the 30th startup they wanted to work with. But just through process of elimination, we just kind of started moving up that list and pitched to the entirety of the bank. And they liked us enough, not necessarily the company enough, but the founders enough, that they put in 50,000. So that's really what allowed me to leave my job. Was I raised 50,000 from my best friends and their dads, and 50,000 from that entity. And that's what got me here to Kansas City, actually. And then once I got to Kansas City, I started paying myself, my two co-founders at the time, and we started to try to build a product and didn't know how to do it, didn't know anything, and failed really quickly. Shut off that, and I started talking to angel investors. And I actually calculated this before I came. So I've had over 4 years, 374 individual meetings with an investor, whether that's angel or venture capital. So like, the good thing is when you have that many, man, you can kind of get to yes pretty quickly, right? Because if you have that many up the top of the funnel, you can get to the bottom of the funnel. But that over so let's see here, this is 2018. We probably met with 122 from 2018 to 2019. So that's a pretty large amount of individuals that you're working through. And each time you're getting better and better and better, right? And so I ended up raising about 150 grand in the second year of the company, allowing us to kind of just eke through. And I wasn't taking capital. I was having to get part-time jobs. I worked at a liquor store. I worked at a retail bank. I did all these different things just to kind of keep us surviving. And it was all with angels. Unfortunately, and this is some of what we're going to talk about today, from my perspective, is that none of it was in Kansas City. None of it was Kansas City Angels. None of it was, other than the digital sandbox grant that we got, which was awesome, and got us a proof of concept that actually got us to our first customer. Lord, thank you for that. The truth is that we didn't have enough, progress to really make it make sense for Kansas City. And so I raised all my capital on the West Coast in Texas. And one of the things that I want to talk about is the fact that as entrepreneurs, in my group at least, it just felt like the conversations always went back to, you can't raise money in Kansas City early. You can't. And the answer is sometimes you can't. And if you can't, you got to go elsewhere to do it. And elsewhere to me was Texas, Oklahoma, California, one in Boston.
What was the barrier, do you think, that prevented that connection to Kansas City?
I think just like looking at conservative, it's a conservative area, right? Just risk averse, right? It's and this goes into a really big systemic issue, is that if you look at the Bay Area, which is the model for just everything we want in Kansas City, right? All of those investors there have had major returns from software companies. All of them have, right? That's where all the big funds are. This is the process that they created. Here in Kansas City, we just don't have that yet. We don't have 15 I-verifies happening every month. We don't have a lot of these companies just finding, Triple Blind is another great one, right? It's raised a giant amount of capital, and we just don't have that at scale yet. So you have to look at places where there are those people, right? Those angel investors who have already been a part of multiple exits, who have already had maybe an exit themselves, that's been really successful. And so that's kind of how I hacked into this angel group, right? Now fast forward, at this point, I've got angels calling me to be part of our Series A, right? Because we built all this traction, we built all this runway, we built all these different things. And so now I've moved into this, like, I can raise in Kansas City and I don't even need to, right? So my theory about all of that from an angel perspective is, you mentioned like some of the angel groups that are here. I would target individual angels myself. Like, if I were you guys, because you can build a relationship with a person. It's really hard to build a relationship with a group, right? Naomi mentioned this, you can get more personal with them. And that's what investors really want at the end of the day. They want to feel like they're contributing to your success. They want to feel like you're taking their roles. It's kind of like, it's not necessarily like ego stroking, but it's like getting them to be a part of your vision, right? Giving them that purpose and that dream. I think it's easy to do that on a one-to-one versus a group, if that makes sense.
So the ones who are calling you back now, are they people that you had already known before who had said no?
Yeah. And to your point on startups are addicting, they'll probably be part of the next one I do.
So you smiled through the same thing, saying, I got a lot of no's with a nice big smile on your face. And then you're heading towards, you're coming back and I've got enough validation partner that people are reaching out to you, right? So how, talk about effectively communicating with investors. This is a small community and potentially the value of that, or if there's not value, if you don't need the money later on, but effectively communicating with investors and investment community, especially when you're getting.
Yeah, I think telling your story succinctly in 5 minutes was the thing that I didn't do for a long time. Like I would get on a call with somebody and I'd be so excited to meet with them that I just would throw up everything that I knew at them, right? And when I started just telling the story of who I was and who the company was within 5 minutes, and then make it a conversation versus a pitch, I was way more successful with that, because then now they're actively asking you questions versus waiting 30 minutes to ask you questions. And you're able to build that rapport faster. I don't know if you all have ever been in sales in some type of role where you're selling a product, but it's like, it's the exact same thing. And I just didn't get that until I had to have hundreds of conversations for it to finally click for me. I don't know how it was for you.
Yeah, I
Watch,
didn't.
actually, full disclosure,
Yeah.
she raised much more money than me until I raised my last round. So I had only raised, I think, 250,000
Yeah.
when you had like 750.
Yeah.
So she was much better at like learning than I was.
I don't know about that, but I think learning and getting so many no's from especially VCs, I think I've done like 100 VC calls. What I've learned is that you're exactly right. They don't want to hear the pitch anymore. They've changed to where it used to be, okay, let's go over your deck, to let's just make it conversational, them asking the questions. So now I'm much more in favor of just having the conversations and connecting with the person and communicating properly exactly what I'm trying to get through, instead of going through a pitch, because pitch can also sound like you're selling something too, right? And so I really definitely have learned that, and moving forward, it should always be, I think, a quick call to just get to know each other. And then if they're interested, then let's go to an actual deck, and then kind of go into the due diligence, right? But I used to also just throw up everything, and then the person, you don't even know who you're pitching to, and you kind of want to pick your angels too. You don't want the wrong angels. And so this gives you, as the founder, also an opportunity to get to know the angel.
Digging more on that, you don't want the wrong angels.
Yeah.
More of them.
Yeah, so what I've learned from just angels is that a lot of my current angels, they tell me all the time, like, I invested in you, know me. And I know that this is something that you started with, and you may not succeed with this, or you may not end up, the company may be a whole different company by the end of it, but I'm investing in you to go and figure it out, right? And so you really want those investors to be on your side and to understand, like, okay, if you have struggles, you can come to me, right? And I can openly come to them. And I don't have to pretend. And that's one of the earliest things that I've learned too, is that I was always so afraid with the investors to be completely honest, but you always have to be completely honest. That's the best thing you can do for your own conscience and then also for the investors. But there are some horror stories of really bad angels that will just not really respect you and not understand your business or not put in the time to really help you. And you don't want those.
And they will waste your time.
They will waste your time.
They
They
will
will,
waste your time.
for sure. And they'll ask, exactly, they'll ask a lot of things or like documentation when you should really be selling your selling, being busy running the company, you're really having to accommodate to the investor. And so you have to be really careful who you take money from.
I mean, I think that one of the things that I really learned quickly, this is one thing I did learn quickly, was that like, I don't like working with people that I don't like. And that is just such like a fundamental thing that there are plenty of people to invest in your company. You don't have to work with an a-hole, like you just don't.
Yeah.
You're getting married to them as much as they're getting married to you. You really got to make a convicted decision around who you put in your on your cap table. The other piece of that is that they will waste your time. The ones that, hey, you know what, I'm not quite sure. Hey, like, let's have a follow-up. If you can't get an investor to tell you yes within 2 meetings, it's probably not gonna work out. I don't think I've been a part of one.
Are you sure?
I apologize.
You have to be really good about keeping them on pace. Because again, if they are not getting, if within the first meeting you get a follow-up, that's great. If by the second one, they can't tell you that they want to invest in you or not, it's time to find the next one, because every moment that you're wasting with that person, you're missing your opportunity with the right one. And that's a tough deal, because you want to feel that positivity as someone wants to meet with me. I got a meeting on the calendar, it feels good. But the value of that, like the value quotient of that, is not as great as you getting rid of that person and moving on to the next one. Dr. Shelley?
I'm making eye contact. My question has to do with, after you've had the meeting, after it looks like there's actually some synergy there, the due diligence and the data room. I think that's like elephant in the room that nobody wants to talk about because it's so daunting. Can you kind of talk about your experience in putting those together and the pitfalls? I mean, maybe it's a wonderful experience, but I
I
have.
got a funny story. You got a good
Go
one.
ahead.
So, so again, don't know anything. One of my first investors asked for a data room. I was like, what is that? And then they didn't talk to me ever again. So we're not obligated. But I made it super simple. Basically, actually, Matt Kinefik helped me make mine with, it's not Roll Street, what's the other one? Fountain Innovation Fund. So that was the first time I actually had someone like help me actually like, what is that? Oh, this is what it is. And I modified the one that they did in there, like, I don't know if you've ever been a part of their like roll up or whatever, but it's pretty simple in my opinion. It's your corporate formation documentation. If you're an LLC, that kind of, entity documentation, any contracts that you sign with any third-party vendor, whether it's an internal vendor to your software or external to you producing software somewhere. The third piece would be like orders. So if you do have sales orders, or if you do have letters of intent, or any kind of contractual obligation with the customer, all that's in there. For any of you that have had founder issues or founder type documentation, put that in there as well. And then that should suffice at that stage, in my opinion, at that angel stage. Some of them will ask you for bank statements to verify that you have money to your name. But other than that, that's all I think I've been requested.
Yeah, I mean, it's not as hard as you think, I think, and I'm happy to share kind of what I've there too. Only other things that I would add is like your term sheet, right? And I haven't really ever provided bank statements, but any kind of accounting statements that you have to show that you have income, all of those things that just kind of back up your story as you talk to the angels. It seems like a big daunting task, but then it really isn't. It's just kind of organizing all of your documents in one place.
How many of them at the angel level actually asked for a data room?
You haven't?
How many?
Oh, how many?
How many of yours did?
It's very rare. Our angels really won't.
That's like less than 5%.
Yeah, it's pretty rare. I do have one investor that like wants to know every line, everything, but other than that, everyone, they really didn't really ask for much. Even the second that they came in, didn't really ask for very much.
I'd say angels really are just invested in you. Like that's
Yeah.
all they really care about.
Yeah.
Maybe a follow-up question would be, what structure did you do their investment in?
Ooh, that's a good one. What's your name?
Safe, Delvin.
Delvin, yeah, that's a good one. So this is probably gonna be one of the biggest headaches because you should all do early stage investing in safes, safe notes. And you're gonna have to, I mean, probably you're gonna have to educate all of your investors on what a safe note even is. My first company I ran, in learning mistakes here, I actually raised the price round on my pre-seed.
I
Don't do
did
that. You did that
I
too?
do,
That is a nightmare. I had to pay a ton of money to fix that problem and I'm still paying the, I'm still paying for that mistake. If that makes sense. And just real quick, what that is I priced my company and that then has a ramification for my employees when I make options. That was basically the floor of what I could give them their options are, or what I could give their options at, right? Which was 10 cents a share. And it should have been at like 0.00001. So that was a big mistake that I made, right? Now, the second round that 50,000 that I raised originally, right? Second round was all convertible notes. Convertible notes are probably the next one that you should raise at if you can get an investor here to give you a convertible note or sign a convertible note. Biggest difference between a safe and a convertible note is basically an interest rate. So a convertible note is going to have anywhere from a 5 to 8% interest rate, which basically gives the investor more shares at the time of an equity financing, right? A safe doesn't have that mechanism in it. The reason why you want to do safes is because it's quick and easy and it's standardized.
Yeah.
You literally go to the Y Combinator website, you pick which one you want, you print it off, and you fill in the brackets. It's that simple. And the way that you can get an investor to take that is really by telling them that it's in their best interest because it actually is in the best interest of both parties. It's a super easy legal document so that if there is an issue, it's very standardized. There's precedent on the legal levels for if there's a founder problem or if there's an investor problem for there to be some sort of quick court decisions, arbitration decisions versus where convertible notes can get a little bit more hairy. And you're going to have spend some more money if there are issues down the road. So.
Yeah, I did the same thing. I did an equity round. I didn't have too much of a trouble converting to a safe note now. So right now I'm on a safe note. Initially,
Did you do that because you didn't know any better, or did you do that because one of your investors asked you to price it?
no, I think I didn't know any better. The family office also didn't know. And so they were like, all right, we're in. And so we did an equity round that way.
And that's what you hear on TV too, right? Like Shark Tank is always about, oh, I'll give you 300,000 for 30%, whatever. And with software, especially, like it's just the scalability. If you're trying to raise a venture type of company, and that's the big question for you guys. Like if you're trying to raise a venture style company, you need to do safes because it's the easier cost of fundraising, right? Like it is not as expensive. When you do a price round, I know with my last round that I raised, which was a price round, I probably spent like 60, 70 grand just in legal fees. And it's a lot, yeah. But it accessed a lot of money for me. And sometimes the investors will write that on their side, sometimes they won't. But it's just another little piece of it.
So how did you find angel investors that were outside of the Kansas City area? Did you go to
Oh.
Angel List or did other areas?
Oh yeah, lots of hacks. What's your name?
Lisa.
Lisa. So Angel List is actually a great example. So go to Angel List. Before, like when I was raising capital, they actually had, it was basically like LinkedIn. You could literally search a geo, like a geography. It would send you all the different angels that are part of Angel List syndicates in your area. And I literally had 3 different pipelines. I had Angel List pipeline, which had a bunch of different people. Toby was on that, so I met Toby. And then I did one on LinkedIn. I basically searched in the search bar, Angel, Kansas City, and it popped up a bunch of people. And I just basically put everyone I knew in that pipeline. And the third one was just literally Google searching Angels, Kansas City is basically how I started. And literally just working one by one, figuring out who I knew that I could connect me to that person, having them reach out for me. If I could get their email, I just would cold reach out. AngelList was all cold reach out, because it just gave you their email. I believe AngelList actually changed that though. I don't think you can do that anymore, which stinks. The one thing I did realize on LinkedIn though is angel investors are very proud about the fact that they're angel investors, whether they are angel investors or not. So it's not efficient, and that's why you have to have hundreds of meetings, because some people they just put that on there and they actually don't write checks. So that's how I did it.
Did any of your investors want to mentor or be part of the direction of the business?
I had a lot asked in the board in Kansas City specifically. I don't know why. Nobody I don't want to be on the board. Like, I don't know why anybody else would. It's literally like board meetings are the biggest time suck, in my opinion, each quarter. Like I don't know how many hours you devote to yours, but I put a lot of effort into mine because I want them to give me more money, right? So like it's like a interview still. But I've had a lot to ask to be on my board. And then I've had a couple that just like wanted to give me money and let me go run. So I think it was a mixture on my cap table at least.
Yeah, most of mine are also just give you the money and just see. However, I do have a group of people that came in together, and that's how they kind of invest, is like 4 or 5 angels together in Kansas City. And then they designate one as your board member. I think one of the things, I'm so lucky I have a really good board member. So he does mentor me. We do have calls often. And then, he's really there to help you when you're struggling, right? So it's good to have those people. Because you remind me all the time, like, it's not easy being an entrepreneur. You have some hard nights, like it's hard. And so when sometimes I'll tell my board member, like, this is really hard, like I'm not quite sure which direction, you'll be like, what's your gut say? And then they'll say, this is your journey, like just keep at it. So it's important to have the right mentors. And I'm lucky I have one. So yeah, some will ask to be on your board and mentor you, but most of the time they're just wanting to kind of give you your money, see where you can go with it. Because they're busy too, and they're typically invested in more than just your company.
I'd also say, like, don't let that be a person who's not been a founder,
True.
right?
100%.
Like, because you'll get people who are, and not to say anything bad about like a lawyer, but like this is an instance for mine. It's like, it was a lawyer that asked to be a mentor and have some advisor shares and stuff. And my question was like, great, what can you do? What can you mentor me on? And that was when the conversation stopped, right? So like you really got to weed through the BS on some of that stuff, because people will ask for things that they think you might be in a position of weakness to accept, and they get more responsibility. But to your point, like, I think that if that's a founder, like a good founder, like, oh, that's pretty invaluable.
Because they've walked through the steps that we've walked through, right? So it's easy to relate and learn from.
So when do you give up a board seat? I recognize that it's part of the negotiation,
Yeah.
but like somebody you'd want on your board is obviously a former founder or, has been in your shoes. That's ideal. What else do you look for? I didn't realize that's a multi-part.
Yeah, so I mean, it kind of goes back to the question, are you trying to raise a venture-backed company? If you're trying to raise a venture-backed company, don't do it until you're seed round with a VC. You can have an advisory board. Like, advisory board doesn't equal board, right? It's a different thing. So if you have people that are wanting to be on your advisory board, great. You can throw those out as much as you want. Get 30 people on that bad boy. But the board is a very coveted position from a venture perspective, right? You want to give that to your seed investor, probably an employee, like your, if you have a co-founder, 2 co-founders, 1, venture capital. You want to always try, this is more of a tactical thing. You want to always try to have power on that board, because that's actually the easiest way that you can be ousted as the CEO or CEO or you have.
I'll plug that we do a workshop, multi-month workshop twice a year called startup boards and fiduciary boards. Half the classes board members have our entrepreneurs forming boards, and it is about that kind of tactical side of it. So we'll reach out about that too, but it's awesome. That's great intel.
And if you're not trying to be venture backable, like, which is great, right? Then it's much more about like, what's the strategy? Like, who can I get here that can help me get to the next stage, the next level? Maybe there's somebody in your industry that's exited from, like hospitals are really big, like biotech stuff's really big in Missouri. Like maybe you're doing a healthcare startup and you need to go get that former CEO of Blue Cross Blue Shield, like you can really use it tactically, which I've seen that pretty well.
Yeah, so when I got my board with that investment, right? And by design, we just kept it as two because you have to be really careful who you pick as your third one or a fourth one, just like you said, because you could get ousted. But my board also agrees, right? It has to be the right person. And so just now, being at this for 2.5 years, now we have a former CEO of one of the PMI companies going to join us as a board member. So that person's going to give us a lot of credibility in our company because the rest of the MI companies have always looked at us and said, you're a small startup. Like, are you thinking at the level of that we as, billion-dollar corporations thinking? And now you're bringing in someone that was a CEO at one of the MI companies could really bring, yes, we are thinking, right, in terms of how can we help the PMI companies? And so that's the right time to kind of bring that person on board to really help the company, just to your point.
Question, back to multiple angels, I'm just curious, are each of those separate negotiated deals or do you try to combine them into one safe agreement? Just, you don't want it to become a security because that gets to put you in the fray.
So typically, I think in my experience, most of the angels will follow. So you just have one that'll kind of do the due diligence and you're setting the terms on the safe work. We did anyway, actually with the board of help of my board, and everybody just followed. So I think it's the same in VCs, right? They want to invest, they want to follow on. They don't really want to do the work of the due diligence and they're looking for another VC to do all that work and then they'll follow in. And so there's usually one that's kind of setting all terms.
Yeah, so you can raise multiple safes at multiple valuation caps and multiple discounts. And you can use that as tactically as you want to. So for instance, if you were a pre-seed startup, you could raise on a safe that's has a valuation cap of $2 million. And then 2 months later, you have all this traction, you can get on another safe with another investor or a different investor, the same investor, that's a safe for a $10 million cap. You can literally keep doing that in perpetuity as long as you want to. But when those safes convert, right? When those safes convert at an equity financing of usually $1 million or more, that's when all of those different safes that you have is where the caps becomes a nightmare, right? All those convert at different valuation caps, right? So there's nothing wrong with, some of the like startups and YC even will have a safe pre-YC, post-YC, where they're going from a 5 million cap to an uncapped, which is a whole nother conversation. But so the answer is you can do really anything with those. And they're super easy because you don't really change a whole lot of mechanics. Whereas those notes, there's so many different levers that you pull on those, so you can get a little bit just more headache for you as the founder to manage your cap table, Thanks.
Yeah. I want to ask you, multiple founders have kind of, when they get into this journey, talk about it, it's essentially become their full-time job. They're managing a lot of relationships, they're fundraising. Both of you, I know, are on your team while you're raising money. How do you strike a balance? How do you do the thing all at once? It's more than 2 jobs, really, right? You're building a team, you're building a company, you're building a product, you're raising capital, you're preparing for quarterly board meetings. Crazy.
I love my board member. I absolutely love them. That's the best part. I just want to look good for you.
Right. Yeah. Not exactly.
Yes.
Yeah, sure.
So it is not 9 to 5. And I'm sure anybody in this room already realizes that. Like there are so many hours that you put in that it's just incalculable. That's also some of the fun of it, right? Like that's kind of why you're in this line of work. But the balance comes into the sense that like if you don't have balance, you will die. Like you'll just kind of quit out on yourself. And really the way that I've done that is just giving a lot of responsibility to others. And there's so many ways to do that without paying an employee. There's paying people with equity, there's paying people for contracts, there's just so many different ways where you can empower other people to do what I call their superpower. And for me, like marketing is just not my thing. Like I don't care about it. I know it's important. I don't want to do it. And giving people that responsibility allows me to have more time to do the fundraising, because fundraising is like when you're in the throes of trying to raise a round and you're trying to handle all the different investors and all the things they want, like it takes all your time. And so that's also why a lot of people tell you to like try to have a cap on how long you're gonna try to fundraise. You mentioned that you tried for 6 months or 7 months. Like I tried for like a year, and like that's a dumb mistake. That's a mistake. You have to have FOMO, so you have to tell investors this is when it's closing, this is how much I'm raising. And there probably is like another conversation about like how you can do that really well. But if you don't do that, you'll be fundraising all the time. And then you're not building your business, and then nothing's happening, and you won't be able to fundraise anyways. So it's really about empowering others, putting a lot of time into your startup. And then when you can hire people, giving them the responsibility so you can go and kind of replicate yourself in other avenues of business.
Yeah, very similar. I think the one of the things that I've learned a little late in the game is that you have to hire right, and you have to hire people that are comfortable being in startups. Do not hire anybody from, well, maybe you'll find the right person, but like corporate world, if they've been in the corporate world for 20 years and then they join your company, they're like, okay, I need all of these resources, and you're this small little startup, and there's no way that you're gonna be able to give them their resources. So
Go make those resources.
yeah, and so you have to find the employees that are right and that can wear multiple hats, and then you have to trust them, but also trust by verify, right? So a lot of the times when or during the time that I was raising money, one of the things I learned is that I kind of removed myself from like the technical scrums and kind of the managing of it, and then I just kind of dedicated time. But what I've learned is that you as the founder should always make time to be involved in that piece, because things could have moved a little bit faster. So again, finding the right people to delegate to, but at the same time, you also have to be there just to kind of manage everybody to make sure that they're going in the right direction, and that they feel connected to you too, right? To your mission, because you're always constantly there. So that was one of the things I've learned. And to me, I'm a non-technical founder. And so a lot of the product gets done or built by our technical team, and just being really glued, just always there just to listen, and over time you just learn. It's kind of crazy what you can do. You learn all these different things, and so yeah, always be there, trust, but also verify.
How granular did the angels ask you to get in terms of how you would spend the money you were asking for?
Not very granular. They're really just trusting that you are gonna do right with their money, and they just give it to you. But you also have to be really prudent with that money to make sure your company lasts, right? Because you're gonna go back and ask for more again. And so maybe I had one investor that really wanted to know all the breakdowns, and he still is the same way as we are raising again. But everybody else really, they just ask for, gosh, they didn't even ask me like why you're trying to raise how much,
You're just too trusting.
Can I get the names of those angels?
Yeah, I think that probably the most I've ever been asked is like a pie chart almost in a deck.
Yeah.
I have one angel who likes to be tactical, so we just have tactical conversations. It's more like higher level than like granular. And I'd be willing to bet that the granular ones, they probably haven't been a founder, because the founder would know that at your stage, you really don't know. Like you might say, I've got $100,000 scheduled for whatever, marketing, right? The bucket of endless money. And that money could be that you literally next week could carve that and be like 50 now is going to this because I've got to get this milestone. So most of the time, the person that you want to be with realizes that you just need to kind of have an idea, and then it's up to you to actually go execute it, and then you need to be able to just like normally said, trust you to get that done. Yeah.
I think most of the time they ask, how long is this money gonna last?
Yeah, that's a better.
That's usually like,
Yeah.
consider 12 months runway, 50 done. And And they'll, if you come to them before that, then, they'll remember that that's what you said, so where's the money, right?
Yeah, that's a good point.
Right up against, I'll take one more question and then maybe Mark or tell me if there's any kind of closing remark you want to make or something we didn't get to jump into that you want to make sure you made the point. I'll give you that opportunity as well. Is there one more question?
I have a question. Was there ever anybody that offered money and you said no?
Unfortunately, no, not yet.
No, but I will, like, there are people who have offered now that I've said no. So yes, but like not with my current venture, I would say. I didn't get that opportunity. I think I saw one over here.
I was just curious, like, speaking to more like building on your team, how you incentivize them, especially coming on early. Like you talked about kind of options for like, how can you want to have the best people, but you can't always pay them.
Especially right now, if you guys have looked at what a Google engineer is getting paid, but it's nice. I can tell you, I did it. I mean, so I was lucky in that I had a CTO who worked at like all the tech companies here in Kansas City, 15-year vet. I paid him like $1,000 a month. I bought him in on the vision though. Like I bought him in on the culture that I was wanting to build. I bought him in on the company I wanted to build, and I bought him in on the product that I was going to give him the ability, empowering him, right, to go build. And most tech people who have been in Kansas City and worked at a Cerner, worked at a Hush Blackwell, worked at some of these bigger groups, they want that freedom to go create finally, because they've been kind of putting their, taking their lunch pail to work every day and just kind of coding for no reason. And so I was able to really get them in on that vision, and then I backloaded it with equity. And there's so many resources you can look up as far as how much equity you should give per person. And if you're trying to raise venture money, make sure you research that, because if you give too much, then you will not be able to raise venture. If you give too much to one employee, you will not be able to raise venture. Like there's all these red flags that come up that no one talks about openly. And so it's like, you got to make sure that you do that correctly. And I was able to hire a CTO, an architect guy, like a more back-end guy. I was able to hire like a 19-year-old kid who taught himself how to code, and like he was an intern for me, so I knew him really well. A product person out of Portland who I knew pretty well. These are all people that had anywhere from, besides the college kid, like 8 to 15 years experience. And they all wanted to be a part of something new. And like that is also, along with fundraising, like a very difficult task to find those people. And so like, I'm not gonna sit here and pretend like that was super easy, that was really hard. And now we're on the other side of that fundraise. Now all those people have full-time jobs, all the benefits, all the perks, and they're still getting to do what they want to do. And now we've filled their people below them to go and now empower those people, and hopefully that'll continue to go on forward. But that was a hard one to do, and it's getting harder because it's more expensive to hire good talent.
I almost feel like you should run a class on how you attracted all of your employees. I mean, you did an amazing job, and you've got a big team. Like, how many people work for you now?
Just hired another guy, so we have 14.
14, yeah. Amazing.
I'd love to hear more about that.
Yeah.
Well, I'll stick around, like I don't have anything else for us today, so I'm happy to. The other thing is-
Either you wanted to share, just as maybe something we didn't jump back to, you just started down an avenue that you wanted to give a little more clarity on, that with a closing comment, encouragement.
I think I have 3 things. One, if you are a Kansas company, or if you are trying to figure out if you're going to get in Kansas or Missouri, there's really good program called Kansas Angel Tax, and all of my angels utilize that. So if they, I think the cap actually just went to 100K. So if an investor invests $200,000, they can get $100,000 in angel tax credits. So it's literally money right back in their pockets. And it doesn't have to be a Kansas angel. It could be someone that's in Texas that invests in your Kansas company, and they can sell those for, I think it's like 80 cents on the dot. So if they invest 100K, or say if they invested the 200K, they can sell their credits to, there's a lot of wealth firms here that will buy them. There's a need there. So definitely apply for that. And then secondly, Talk to also, there's the Wichita Angel Fund. I think there's a new fund coming up soon. I can't really talk to details because I don't know yet, but I think it's a new matching fund that will support Kansas companies. So if you find a good investor here, they'll match it. Obviously, they'll do due diligence on you. So that's coming up. And then thirdly, like, you were crazy to start something, but I mean, there, it's gonna be a really hard journey, but just know that it's your journey and you're on it for a reason. And those hard days are gonna come, and just remind yourself like to keep going. And you may not end up like where you started, you may end up right where you started, or you may end up being a completely different company, but know and not be afraid that those changes and pivots will come. Because that was something that I was always so scared of, like pivoting, but you cannot be scared of pivoting. Because, right, again, you may end up with completely different company, right?
Yeah, yeah. I think my, like, one thing that I will say we didn't really quite get to, we get to a little bit, is the fact that, like, just because you're in Kansas and Missouri doesn't mean you can't be $1 billion company. Like, too many investors that I talked to when I first started were like, oh, you know, being in Kansas City, you gotta move to Austin, you gotta move to the Bay, you gotta do, New York or Atlanta or whatever. Too many people tell you that you can't do something, too many people tell you you can't raise money, too many people tell you, and the more and more that happens in one region of the country, the more people leave, right? We've had, unfortunately, a lot of people, a lot of great entrepreneurs leave this part of the country. And unfortunately, with what happened with COVID, you can get into any room now. Like, there's no excuses at this point. Like, you can get into any room. You can talk to Andreessen Horowitz tomorrow if you just go the right way about it, tell the right story, get them excited about what you're doing. You can build a business anywhere. So what I would say is, don't let where you live be a limitation on what you can build, if that makes sense. And I promise you, this is from a person who, like I said, there's one angel on my cap table in this company from Kansas City. My second company, 4 out of 10 are from Kansas City. And the reason why is because all the hard work I put in the first one, and now it's easier to raise in the second one. And so if it's your first company, the last thing I'll say is that this is your PhD in entrepreneurship. Congratulations. If you get addicted like Nomi and I are, the second one is easier, so know what you're doing, but you definitely have to go through those walls to earn that education. If that makes sense. And thank you all for being here.
Yeah, thanks for being here.
I said, here, the hope is to answer some of those hard questions, to realize the kind of critical inflection points, and then get you in front of folks that have been there and done that, and kind of help facilitate, get you over that hurdle, start having those conversations. I think the connectivity in our community really matters. Founders like these guys willing to come out and talk to you. So I know so many people so excited about it. They built this room, and that's super cool that you're in the room with these guys and know one another. I heard Barbara say you can hang out a little bit. You're welcome to hang out. Just catch some of these beverages and those amazing cookies back there and go from there. But thank you both for being here today. Thanks everybody else.
Thank you.
Yeah.
Brandy, thank you. Forever. You still.